Oh, I have welcome to cold evening. Okay, ready?
hmm
Welcome to the investor sales process. I'm the startup coach, founder of Toronto Starts, one of the largest startup communities in Canada, and with me today is Trevor Shorte. Welcome, Trevor.
Hello there.
So, why don't you start by telling everyone a little bit about you and Songbird Marketing?
Well, actually, we are a marketing and PR firm that caters to entrepreneurs and startups, and our goal really is to just help them build their businesses and helping them just to detail some of the foundational stuff that they need to look at. Looking at things like their strategy and the value proposition, and some of them even helping them with their idea validation. But the idea is to help us a entrepreneur create an actual product that people want to buy and help them get that message out to build a business.
That's great. And I know a lot of customers that work with you. You mentor a lot at Ryerson with
Yeah,
Toronto Starts.
yeah.
Do you want to mention any of that stuff?
Sure. We actually do. I'm a business advisor at the Fashion Zone for Ryerson, and also as you mentioned with Toronto Starts. So we work a lot with the startup community, and I've actually been having some conversations with some other folks to try to expand this out into more of an Ontario wide partnership with another company. So like I said, there's some stuff coming down the pipe, but just nothing to um, talk about right just yet. Still a little early days.
And that's fair. And we don't think really of anybody as our competitor because we want people to find a home. So let us know what you end up partnering with and what goes on because we're happy to spread the word.
Awesome.
So
Awesome.
we're going to talk about the investor sales process today. Did you want to take us through the basics of, you know, these things? We're going to touch on aspects of sales process, mapping the early stage startup investor sales process to prospecting, qualifying, first contact, pitch, handling objections, closing the deal, and approaching the getting early stage investment as a sales process. And that you have a sales funnel that needs to be filled gives you a better approach and a better chance of success. Do you have any comments on the sales process? Is this basically what you follow? I put obviously first contact is to us specifically. We're going to drill a little deep in on that, but
Mhm.
is this the process you follow, Trevor?
Yeah, I mean, really, when you look at and we kind of briefly touched on this when we were talking about the project in general. It's like when you're talking about sales, it's really just about making connections and getting people to understand what it is that you're trying to do and how you want to promote your and how you want to build your business. And then once they're on board, figuring out how this investor essentially is going to be able to help you expand and scale your business.
Yeah, exactly. And we're going to talk a little bit about that. We're going to be high level on a bunch of things because I have other videos and other things I teach where we go drill in deeply on each of these. But let's start off with prospecting because we know that getting getting the list of clients, where do you start looking for them? What's your sales process like if you're doing or working with a B2B business and they come to you and says, I don't know where to find clients, where do I find them? What's your process look like? Where do you start? What should be people thinking about?
Well, my first question I want to ask them is, well, who are you looking to target? Because that is very important when it comes to figuring out finding the people you're looking for. Because if you don't know who you're looking for, how are you supposed to find them? Because who you're looking for will determine where you're going to look, right? So if you want to look for early stage investors, then maybe you might want to look at a group that offers access to early stage investors. If you want somebody who's going to do angel funding for you or be a VC, then you're going to have to look in those areas. But that's the first thing you want to try to figure out is who is the target I'm trying to get to, and then build your message about your business around that.
Yeah, I'm muted there. Sorry. Um, yeah, we start. That's exactly it. And we start with building a big list. So, of all the people out there, we're looking for startup investors. So, in reaching out to new contacts, uh, referrals are always the best option. So use your network to
Mhm.
take to your advantage and find a connecting path. However, as referrings only scale so far, you should start looking at generating some PR and market visibility so that when you do reach out to people, they'll have heard you. You can send them links. When they Google you, they're going to find this stuff. It only helps you. Get promoted in electronic and print publications. But while all PR is good, think which are the most important to reach your target prospect VCs. So if you are a climate tech startup, then don't go after where climate tech investors are, what they're reading, magazines, publications, that kind of stuff, right? So that's where you want PR. Getting PR is somewhere else might not be of importance. Does that make sense?
Yeah, 100%. I mean, when you're trying to, when you're trying to build a relationship with somebody, you need to understand, where it is that they come from, where they're going, how they do their business, and try to appeal to the things that are going to get them your attention or get their attention. I mean, the one thing that you don't want to have when you go up to an investor and say, "Hi, I'm doing this," and they look at you and go, "I'm sorry, who are you again? What proof do you have that your concept even works?" And they may not even give you the time of day if you've got absolutely nothing to back that up with. So you need to build up a presence of some sort. And one of the things we talk about to entrepreneurs when we're talking about even finding when you're trying to find new customers, one of the things that people do when you tell them about your business, they're going to Google you, right? So what are they going to find when they actually look for your business? So you want them to be able to find information about you that's going to be obviously positive. You want them to see, as Craig said, PR, like news clippings about you, things that people are taught where people are talking about your company. So that gives you some kind of credibility, because that's really what's going to get you your first meeting. You have to have some type of credible product and service offering and actually some kind of proof of concept that people are actually going to want to spend money to buy what it is that you're offering.
Yeah, that's a good point. One of the tips I talk about elsewhere, but not here, is people are emailing investors all the time and reaching out, but they send it from their like Hotmail or Gmail account rather than a company account. If you're
Drives
asking
me
someone,
mental when I see
if
that.
yeah, if you're asking somebody for a couple $100,000 or $1 million for your company, shouldn't you at least invest it in $5 in an email domain? Like, let's So like it really turns VCs off because it feels like you haven't put the effort in, yet you want them to put the money in. Like you're really missing a piece. But what's the first step in any sales process, right? Building a funnel full of leads. So since raising capital is a numbers game, you need meaningful number of investors at the top of the funnel to end up with a handful of checks dropping out of the bottom. As a general rule, you need to meet with 100 investors in a couple of months to raise capital. 100 meetings means you need to reach out to at least 1,000 investors if your meeting conversion rate is 10%. If you're prospecting with cold outreach, your meeting conversion rate will be much lower. And when we consider only a percentage of investors will even consider your startup, right sector, right stage, etc., and we're going to talk about that in a minute, hopefully filter this list, you'll need a big list of investors to get started so you can filter it down. Does that make sense?
Yeah, and then the other thing you want to also look at as well is just really, again, targeting specific types of investors, because not all investors are going to be valid for your business. Some, like you mentioned before, won't invest in the industry that you're currently in. They only invest in a different industry. You have to be very, very laser focused as to who it is you're going to be targeting. So you really need to do your research and when you're building this list, as to who actually is a viable target for you.
So as a startup coach, I look at it a different way. I build the biggest list as possible, and then during my qualifying, I filter that list down. And we're going to talk about the filtering, qualifying. It's like qualifying prospects. You're on the phone.
Mhm.
Unfortunately, we qualify investors before we reach out to them to figure out how we're going to reach out to them, what we're going to do, because we're not selling them a $5 product or a $20 product. We're trying to get a big check from them. So we have to do a little bit more research and qualify them a little more. And we're going to get into that. But so where do you start to find these leads? I say get a big list, because you know, 1,000, 2,000, because you're going to cut half of them out or a third of them out. That's why I'm saying big list, big list. Numerous places. Here's a great bunch to start with. AngelList has assembled a solid database of investors with emphasis on angels and syndicates. I think they've got over 29,000 investors on their platform now. The Find Investors feature on Founders Suite connects to a database of roughly 50,000 investors. Crunchbase is a useful cross-reference of deals for looking at who are funded, but not competitive deals. We'll talk about that. LinkedIn is extraordinarily useful as a resource for finding intros, but can be somewhat overwhelming and noisy. I like the word noisy. On the investor sourcing side, the best way to use it as a lead generation is to pick a person in your network, like myself, find their connection, search for investor, and see who they know. You know, call this scraping your network. It's a little time consuming, but every lead will presumably be a warm intro with this method instead of a cold intro. So you get a much better chance of getting in. Newsletters like Mattermark, CB Insights, and PitchBook have built large data sets with advanced search filtering capabilities. These are usually things you have to pay for, some of them, but their newsletters are free. So take a look at those. Other places you might want to find investor leads, PE Hub, Term Sheet, Inside. If you don't know what they are, Google them. Conferences, speakers. Usually if people are at conferences speaking or, you know, judging at pitch competitions around, that means they're trying to build a brand for their network, and they're more likely to take meetings. So take a look at that. Quora, a few quick searches on terms such as top SaaS VCs or B2B or whatever in your area will generate a decent list of things that you're fun of. Talk to accelerators, talk to your mentors, talk to Toronto Starts, come to a few of our things. I've got a list of over 10,000 investors that I share, but only with people who qualify. And to qualify, you just have to, you know, show me you're interested and do some stuff, because I don't want people spamming investors. So there's things you need to do. So these are places that you might not have thought about, or you don't know how to, but now you've got some tips on where to go to start.
Now, Craig, let me ask you this question. How long did it take you to build that list?
The list I have, a couple of years.
Exactly. So now this is what I'm saying. Like, you want to build a list that huge, it's gonna take some time. Nothing here is gonna happen overnight for you when you're trying to go through this whole process, right?
I think if you maybe I wasn't actively looking for these. I just kind of stumbled across them.
Mm-hmm.
If you're actively looking, it might have taken a lot less time. And there are people out there, so you can get the lists, but they're not always active. They're not always this. They're not always that.
Yeah.
But
All I'm saying is it requires some work. Is there's no rocket ship to investors here. Where, you know, you've got to put in the work to build it.
Absolutely. Warm intros are always better. So if you have them, use them or get them. Use the same templates or whatever you're going to talk, formulas we're going to talk about later. Does cold outreach work? Well, in short, it can, but if done wrong, it's generally a waste of time. So if you spam investors with the same message, you're going to get extremely low response rates. But with a little work, you can get those numbers up and start having a few investor conversations every single day. I was talking, I do an investor mastermind where we're startups are looking for funding, and we're trying just to get them to that extra step. And we were sharing tips. We were getting people, just on LinkedIn, getting 2 conversations a day by following some of the tips we were using with investors. So it's not hard. It's not super hard. Qualifying, you know, Trevor's hinted at this. We've talked about it a few times, making sure the investor versus, you know, the client is a little bit different, is the target market for you. So is there any advice you have on qualifying people, or should I just jump right in and then have you comment?
We've kind of touched on this already, but I mean, again, not all investors are created equal, right? So you need to figure out which one's going to work best for you, and it really all depends on the type of business you have, and also what you're looking for, because the raise that you are trying to seek here depend it's really going to depend on who we're talking about. And I mean, I guess the best example of this is, I mean, we've all seen the show Dragon's Den and Shark Tank, right? You see each of those individual people has a different philosophy when it comes to investing in companies, and you have to kind of speak to each of them in their own language, in a way that makes sense to them, because for again, they're not all equal, so you have to treat each one individually and kind of go from there, and that's how you're gonna find your success, right?
Absolutely. The wrong investor will never invest, and this is something you
Yeah.
learn. I'm doing a new thing with our friend Will Greenblatt, actor, pitch coach,
Yep.
musician, and we're doing a thing called Pitch School, and we're reviewing some of these things, and that was one of the lessons learned when we were reviewing Hedgehog Umbrella's pitch. Actually, no, it was not Hedgehog Umbrella's pitch. It was Socialite Vodka's pitch, where they were on Dragon's Den. It was a great product, but none of them knew anything about the market. None of them were into vodka. I can't remember the guy who
How did
the
they get
founder.
on?
Well, it was a great product and stuff. And the founder of Freshie was trying to figure out how does this align with my brand, Socialite Vodka,
Hmm.
because it's for slim and fit. Like, but they all loved it. Like, this is great, and but in the end, they were out. They don't know how to market. They don't know how to distribute. They don't. But so the Dragons are out. They sent that same clip to Arlene Dickinson, and a week later, they're in the boardroom negotiating with her.
Even though Arlene
Right?
said no on the show.
No, Arlene wasn't on the show at that time. It was someone else. But
Oh,
Arlene,
oh, okay.
Arlene does invest in alcohol, and she has in the past.
Yeah.
So it becomes and she knows the market. So it was
Hmm.
just one of those things. The Dragons that were there didn't. The wrong investor will always say no. This is something that, for any reason, like they'll
Hmm.
always say no. People bang their head. I don't understand why you see. Like, doesn't matter. They'll always say no.
Yep, and
Um,
that's the thing, and that's how your qualifying helps you kind of really hone into the ones that you have the best chance at working with, and then just spread your message to those ones, because all the rest you're just wasting your time and energy at that point, right?
Absolutely. An entrepreneur should focus more on which VC to approach than how to approach. And
Hmm.
this is kind of start by doing your research. Spend time trying to understand the goals and preferences of each investor you're approaching. This will help you figure out whether they're a good match for your company or not, and connect with them on a personal level. What's their
Hmm.
background? What are their values? What stage do they invest in? Do they focus on specific industries, geographies, business models? Soon you'll notice that every VC is a little different, right?
Hmm. Yep.
I like to go farther. What books are they recommending? VCs usually blog, they write, they tweet.
Hmm.
Do they have pets? Or do they cycle? Do they, what personal connection can you, when you're doing that intro, that will catch their attention?
Yeah, and creating a personal connection is probably one of the most important pieces of this process, simply because at the end of the day, people do business with other people. That's how it is. Companies exist, and everybody's kind of doing a framework, whatever else. But when it comes down to it, this individual who you're talking to is going to decide whether or not they want to do business with you as an individual and what it is that you represent. That's the basis of their decision making. People buy from other people. That's it.
Absolutely. You send me an email. I'm a cyclist. I like bicycling everywhere. You send me an email, something to do with cycling, and the headline. I'm probably going to read it. I'm probably going to open it. So if you find that out about investors,
Hmm.
think about it.
Just
Sending
do your
100.
homework.
Yeah, exactly. Sending 100 copy and pasted cold emails in 1 hour gives you about maybe a 1% conversion rate. Sending 10 unique cold emails in an hour gives you an 80% conversion rate. So the value prop for the receiver, think about what's in it for them. Everyone wants to help with general advice, but it's hard to respond to everyone.
Hmm.
So
Correct.
make it easy. You have some ideas for their companies, or a thoughtful response to something they wrote or said, or something like, "My work might be fun to read."
Hmm.
because you're into this. I thought you might be interested in reading this, that kind of stuff. Whatever you can do to connect it, right? When conducting research, how can you expect to know what they want if you can't find an angle that will engage them? They're never going to give you the time and day. You need to understand what potential investor is interested, what makes them interested in you, and what your unique angle is to get the foot in the door. What companies have they invested in before? Are there trends in their investment decisions? Do they invest in certain industries only? How much money do they typically invest? What is the average valuation of the companies they invest in? What content are they sharing most on LinkedIn? What topics are they tweeting about, retweeting about? Set yourself up for success by doing this research. Don't get caught assuming all investors are created equal. Take time to do research on this particular investor, what they like and what they don't like. And so you're more likely to catch their attention before you send an email. So
And you actually
that's
mentioned one important point as well, though, too. What's in it for them? You have to be able to speak to that and say, here's what we do. This is why it's going to help you, and why we think it would benefit you in some way. If you can't say that to an investor, you can't have a conversation with them.
absolutely. Um, and we're going to talk a little bit about that because everyone thinks the first hurdle is getting funding, but the first hurdle is get them to open your email or read your LinkedIn message.
Mm-hmm.
So you'll want to filter out investors like we talked about. You won't realistically fund your startup. So think about, has the investor invested in a competing tech company? Because if they have, they're not going to invest in yours, and you're just giving them insider information about your company for free. So why would you do that? No dry powder funds for VCs. Search like PE Hub or VentureBeat, and Google searches to see when they last raised. For angels, scan their LinkedIn to see if they've done any deals in the last 6 months or so. Because if they have no money at the moment, then they're not investing. Because it depends where they are in their fund and their cycle. Mentioned this earlier, wrong sector focus. If a VC is not interested in your sector, they're not interested. You can scan their website, their profile. They share all this information. They're very public about all this stuff. So they want as much information. They share as much as possible. The wrong stage. At the wrong stage. A lot of people are too early or too late for some invest very early and only write checks about 25K. Some invest at 100K level. Some don't write anything less than 500K, and you have to be farther along. And knowing the difference makes a huge difference. If you're approaching a top tier investor who only invests in $1 million or more, and you're asking them for 50K and to look at your startup with no traction, he's not going to give you the time of day. Wrong geography. Scan their websites to see if they focus on startups in a certain region or not, right? Because sometimes they focus on Mexico or this or that or only Canada. And you definitely don't want to be wasting time. The other thing is if they have a bad rep. Sites like funded.com provide some unvarnished color, but your best bet is to ask around. Ask if you, in your accelerator group or alumni or people about reputations.
Yeah,
So you
very
mentioned,
important.
yeah, and you mentioned, you hit the nail on the head. Compelling reason. Why should they invest in your firm right now from their point of view? If you can't find an honest reason, you probably should move on.
Yeah, it's really about what you can offer them, and obviously this is supposed to be a win-win for both parties, right? So they're going to give you money and get what in return. If you can't articulate that in a way that's compelling to them, you're not going to be able to do anything.
Actually, if you qualify the potential targets in the beginning before contacting and do your homework and research the background to be sure it fits, then this means both you and the person at the firm you're dealing with start checking in the portfolio, focus on individuals, the fund characteristics of the VC to match your business. The purpose is to figure out whether there's a potential fit between your firm and the VC. If you ignore this, you're chasing ghosts all the time, right?
Hmm.
Similar in selling, if you don't go knocking on all the doors, rather save your time and focus on the most potential firms which might become your customers.
Correct.
It'd be beneficial to develop a pipeline of prospects and work through them, as you cannot know for sure which ones will buy or which ones will invest. All right, so I'm going to go into a little bit of understanding your prey here. So we're going after investors. So these are quick hits here. Investors are busy. I've got lots to do. Stop bugging me. I'm busy. Investors get a lot of email pitch decks, 50, 100 more a day. Investors, they invest in very few deals. We're talking about 1 to 3 a year. Investors don't care about you until they do. They like warm intros. As a founder, if a founder is given a warm intro, the founder has probably got a great background, so the deal is probably worth looking at. So if you can get warm intros are better. Investors have no reason to trust anything you say. Founders frequently lie to them and talk so much crap they have no reason to trust you.
And some founders are also just clueless too, though.
Absolutely. Well, I mean, that's just the point. Some lie out directly. You could be honest and lie, but you have to prove it, right?
Hmm.
Most investors just want to know enough to figure out what am I doing with this email. As
Hmm.
soon as I can hit delete or send this off to someone else, I'm done. So that's what they're scanning emails for. Investors know a lot about startups and general industries, but never the amount the founder does on your specific industry. So don't assume they have inside knowledge and understands your specific terms and whatever. So when you're talk them at a high level, then go into details. The right fish. You only get one first impression. And no VC firm is interested in someone who reaches out to several people at their firm. You talk to one person, they say no, or they're not interested, and then you start spamming everyone else. Guess what? They have weekly meetings, daily meetings. They're sitting beside each other. They're talking to each other. You do that, and they're never going to talk to you.
Oddly enough, there's an old school sales tactic that they talk about. Start from the top and work your way down. And so, you try to get a meeting with the CEO of the company, and then they basically just tell you, talk to somebody else, you can now go to that person and say, well, your CEO told me to talk to you. So, they're more inclined to take the meeting because, the CEO suggested that you talk to them. It's really insidious when you do stuff like that. I don't recommend it to people, but that's kind of what it is that you're alluding to, is like, you don't want to stretch it too far and go to everybody, right? But go to one person. If they say no, then, cut that off at the knees and don't bother going any further.
Yeah, because every VC I talk to, they don't want someone hitting up all the different things. So I'm going to a partner, or whatever. And in the VC world, it's usually the best to do the opposite. The best is to talk at a lower level person who has the time of day, who's hungry, is looking for that big hit, and they'll work it up the food chain for you. So it depends on
Hmm.
how big of a check you're looking for and who you want to talk to, but you want to get to know the person. There's 10 people at that VC firm. Which person are you reaching out to?
Well, it's
And
it's really it's really interesting because that, again, these are old sales skills, old school sales tactics, but you want to create your internal champion, as they call it, right? So you introduce your product to this person, and they may not be the final decision maker, but they're the one who's going to be, the one who's championing your idea, your thought process, your product through the ranks. And so when someone says to them, what do you think about this? They're going to be the first one to sing your praises. Right. And so sometimes getting in at the bottom and working through that, and finding your champion in that company is always a good thing.
absolutely. And if they're local, or even if they're not, you might be able to use some tactics. But if you do the research and you find out about people, you can find them. When I say
Mhm.
find them, I mean they go to groups, they go cycling, they enjoy reading, they do all these things. People aren't individuals that sit. Well, maybe I am, but in a bubble, don't talk to anybody right now. But so, I go to events. Investors go to events. Again, they go online, they do stuff. Figure out where they are and start hanging out. because you're going to get
Mhm.
great advice. For example, we do monthly investor speed dating and stuff. So start figuring out where these people are. If you join a cycling group that you know 3 investors are in, you start cycling, guess what you're going to end up talking about? Guess what they're going to give you advice about? Guess what they're going to start connecting you to their friends about, even if their firms don't do that.
And an
Everybody is a
added bonus,
cyclist.
you're going to get in great shape too.
Yeah. So, I mean, I use that because that's just a go-to for me, easy enough. But
No, no,
keep
I know,
that.
but that's an added bonus, right? If you join a
Yeah.
cycling group, you're going to get fit too.
And once you know who you're dealing with, or that you're dealing with a valid contact, it's time to establish your foothold. All right, first contact. This is a whole thing. Any advice when you're making first contact?
Um, Nothing that we haven't really talked about already. It's just really know your stuff. Just be confident and know what you're talking about, and don't come across as you just making crap up as you go.
Absolutely. Before contacting, think who exactly you're contacting. I think we've drilled that into everybody. What is important to this particular individual based on their role? You know, if they're a junior person, is this the deal that's going to make them a partner? Start thinking along those lines. As known, many VCs are notoriously busy. Nothing different compared to other people. If the person is not interested, for example, the detailed technical comparison of your widget, don't give it. Who cares? There's plenty of
Yeah.
information available on the available for emission already. So at the initial meeting, you have that's meant to trigger interest and find out the second and potential, not throw up a 30 pitch slide deck. So the first contact is designed to get you the call or the thing, right? It's not to close the deal.
Yeah. So what we say when we're talking about, cold emailing or cold calling or whatever else and reaching out to somebody for the first time, the goal is not necessarily to get a sale, it's to get your next meeting.
Absolutely. So the number one tip, keep it short. So keep the length of any cold outreach, 50 to 200 words. They only have a few seconds of time to make initial impression. If you're past that much text on the screen for me, my eyes start to glaze over. I'm already want to go on to the next email, without even looking at it. So, and I'm not an investor. So, the opening line has the highest probability of getting read. So make sure it counts. The goal is to get a response, not to convince someone to invest in you after reading just your email.
Correct.
Keep it simple. Sorry about that. A good cold outreach. Keep it simple. Keep it a structure. 1 to 2 sentence. Why you reached out. A few bullet points of essential info. Some intro to founders. Problem you're trying to solve. How you solve the problem. Some traction figures or something. And possible other important things to establish credibility. You got investor lead. You got IP. That kind of stuff. One typical piece of advice was to pay attention to the formatting when it comes. Like I said, if I see a wall of text like this, I'm out. So don't do a wall of text. Do text, bullet points text, and it breaks it up, makes it easy for people to read. Brevity is king. Any advice when reaching out to cold like that? Do you usually do longer messages or shorter? How do you do it?
So as I said, the idea is to get the next meeting. So really what you want to do is you're just trying to educate them on what's happening, like who you are. So essentially your elevator pitch, right? Who you are, what you do, why it's important, why you think they can benefit, and ask for a meeting.
That's great. I think that's the way to go, right?
Mm-hmm.
And I always say, and you were mentioning this earlier as we talked about what's in it for them, lead with value.
Mm-hmm.
When it comes to cold outreach and investor, the very first mountain you need to climb, as we said, is not how I get them on the phone. And it's definitely not how can I get them to invest, but how can I get them to open and read this email?
Yeah.
The average open rate, is between 15 and 25%. It's tough. So if the email lands in an inbox and no one opens it, does it exist?
Yeah, I get random emails from people offering me services, and it's really interesting how people will formulate these things. They haven't even taken time to get into what it is that I'm doing. They just send me this blanket email and says, here, this is what we do. We think we should have a call. Do you have 15 minutes in your schedule? It's like, why would I even talk to you? You haven't told me why this is important to me. And B, if you actually did any research, you would know that I'm not a SaaS-based company. So why are you even sending me this information in the first place?
Yeah, I get so much spam for things that don't apply to me, but it is
Yeah.
what it is. Using research you did, like we mentioned, um, craft the subject line. It's the most important thing. It's what they see first. It's what's going to get them to open or not. Do not say things like mobile app investment opportunity. Do
Those are the keywords that get it circular filed.
I don't know. Like I just do say things like just hit 1 million annual recurring revenue looking for a seed VC. Okay. Now at least I positioned you somewhere and I may or may not be interested based on that, but at least you've given me some information and I've evaluated it based on that. Right.
Fair enough.
Writing a good subject line to show an investor value right away in one sentence. The investor will take a few seconds to read that sentence and then decide whether they're going to go further or not.
Hmm. And I mean, again, you go back to if you were in a pitch competition, what would your elevator pitch be? Right? What would you be up there standing in front of people talking about? Take some of that and put that into your email. Not the whole thing, obviously, because I mean, you don't want to just send a whole complete diatribe, but that's the basics of what you're looking to do. You want to give relevant information and provide some values to why it's important.
Absolutely. And when you're talking about first contact, it's usually cold contact, like we mentioned. But we talked a little about investors before. Now we're going to unfortunately talk a little bit about yourself and understanding you as a startup founder looking for funding. Guess what? You're not a big deal. You can't even get a warm intro to the investor. You'll think about this. You're asking someone you have never met and are spamming across the internet to give you millions of dollars. It's crazy. You're lazy and frequently cut corners. You didn't even try and get an intro. You are too into your startup. You know too much and want to say everything. All the little problems you solved, the big hurdle you did, you're way too into the weeds. You rarely keep things simple and high level for the right stage. Your deck probably sucks. Sorry. You don't have any traction. The earlier you are, the less traction you have. If your traction was amazing, investors would have found you already. And on over 80% of the cases, that's the case.
Mm-hmm.
You know it's a numbers game and plan on hitting up every investor you can. You have a startup to run and are prone to take shortcuts even if they may harm you because there's a lot of crap to get done. You love your ugly baby. Okay? And your startup is your ugly baby. Guess what? Everyone else thinks it's ugly. You're probably too early to get funded by anyone. Sorry, that was pretty harsh. It was meant to be. I want you to take, cold outreach seriously. Each cold email should take a minimum 5 minutes. It may take you much longer, but that's going to add up. So you need to prioritize the people. And I want to talk about one thing before I get into an example here. It should be ingrained in you, and maybe you can follow up after I mention this. Escalation of commitment. As an investor or a potential client, I don't care about you. But the more I get to know you and like you, I will care more. I will spend more time getting to know you, the more I like you. The first interaction needs to grab attention and leave them wanting more. The first meeting is like the first date. The investor is learning the ropes of your business. Every additional meeting is to then learn more and more. If you can't grab my attention in the first contact or the first email, it's over before it begins. Think of it this way. If you were an investor and you got 100 emails every day and you responded to only one, why would it be your email? Yes, every other startup is your competition for investor time and money because they're all getting spammed by a whole bunch of other stuff, qualified or not qualified. So hopefully you're understanding how all the details in your outreach are forming a picture of for why you are 1 in 100 and why you need to work on that to get that email response. Do you have any comments on escalation of commitment?
Well, you mentioned this earlier where you're talking about your investor speed dating, but this whole process is literally just like dating in general, right? Would you get married to the first person that you walked up to on the corner and said hello to? No, there obviously has to be some type of period where you get to know each other, where you start to build some rapport and learn about each other, and then you decide, after you've gone on a few dates, then you decide you want to get married, right? And this is no different.
Absolutely. Take a screenshot of this if you're interested. It'll be on the screen for a bit. So this is an example. And again, we don't like templates. Trevor, before I talked to him, said, I don't like, this template, but this is just the idea. Subject line, company name, cross, XXR, and AR raising ahead of a Q4 launch. That may not be your situation, but the idea is to summarize your situation in a nutshell to get their interest. Hey, first name, we're doing a pretty unique thing that does XYZ. We're about to kick off a fundraising process, and I've attached our deck below. Some quick highlights. Now, I don't necessarily like this specific wording, but you get the idea. ARR is XYZ or MRR or whatever it is, growing 30% over month. Publican recently wrote how this customer uses our tech. Our team has previously worked on the Pinterest mobile app. How do the next coming up weeks look for a quick intro and a raise? Any comments on this kind of format?
This is good. I mean, obviously, you want a subject line that's going to catch their attention, and then you give a little bit of information in the beginning. I mean, for me, again, and this is where I would now want to start, looking at, something personal that is going to catch their attention. It's like, a compliment always is a good first line. It's like, hi, I've been reading your stuff I've been following your business. I follow your company. I know what it is that you do. And you can at least let them know that you are knowledgeable in what it is who they are and what it is they do and why you're reaching out to them. Right. And this is why I don't necessarily like templates, because you can't really template that type of messaging. Right. And then once you've established that you're who they are and what it is that they do, and you're now going to kind of do your pitch, and then you say, this is what it is that we have available, this is what I'm doing, and then this is how we think it's going to be important to you, important in the marketplace and the market opportunity, and then why we think this would be of value to you. Can I get 10 minutes or 15 minutes of your time to explore this further? Right? Because again, it's all about, making a connection, showing what it is that you've got, showing the opportunity that's available, and providing value to them and telling them how it is that you think they're going to be able to benefit from what it is that you're doing.
Yeah, so while you were talking about the second template up there where, the first line there, what I know Runa Capital has invested in X portfolio company, so I wanted to show you early traction in this X-based startup. So yeah, this is an example of reaching out to them, understanding a little bit about trying to make a connection.
Mm-hmm.
They're all a little bit different. I like
And
to make
again,
sure when
and this is why I say I can't really, suggest what kind of templates to use, because that part is always sort of always subjective, right? But you just want to kind of give the theme based on, create the connection, introduce your product, introduce the opportunity, tell them why you think it's going to be of value to them, and then ask for a meeting.
And you can template most of it, is what I'm saying, because
Mm-hmm.
your bullet points are probably mostly going to be the same. Who
Yeah.
you are is going to be the same. So keep that in mind. But a couple of things I just wanted to point out is if you're sending an email, I always like to send a link with a deck. That's easy to download and accessible. Don't make them ask for it if they're interested. Second thing, you want to track opens. If you're sending out emails, you want to know who's opening and who's clicking on what.
So here's where I guess we kind of differ in that whole link thing, because if you're sending somebody to something to an investor with a link in it from an unknown subject, they're less likely to click on it because they A, don't know who you are, and B, clicking on links is really bad from unknown emails.
Absolutely, but this is fairly commonplace in the industry. So what you want to do is put your deck somewhere so they can tell that it's, on SlideShare or it's here. There's a bunch of other places where you can that host your deck, and you make the link obvious. But when I say track opens, I'm really tracking opens of your email, not necessarily tracking
Yep.
clicks on your deck.
Mhm.
Because yeah, that link gets messy. I'm using email tools to say, did they open my email? Did they not open my email? Right? What's working and what's not. So I like to track that, because then you know who to follow up with and who not to, and that kind of stuff. And secondly, if they never opened your email, you can go back to them a month later and try again. Because you're not.
Yeah, you technically could, yeah.
So with a different subject, with a different this, like there's all things you can do. So, if you haven't hassled and they haven't opened your email, you can try again. I also like doing, asking for specific things, like how does next Tuesday or Wednesday look for a quick intro, or because I want to elicit a response. Even if the response is no, those aren't good dates, that means I can respond and propose another one or whatever, right?
100%.
So anything you get to elicit a response.
Don't send them a link to a calendar to pick a time on your schedule.
Yeah, and my advice
They're not
is
going to
you should,
click it.
yeah, you should always schedule the calendar. Do not leave it up to them, because that's a lot of friction that is easily dropped. It
Yep.
is. Get a warm intro if you can. We've talked about this. They'll talk you up a little bit, and they're better. It's the same type of information you want to communicate via your warm intro, but it's just going to be different where someone else is actually talking for you. Getting the meeting. So any advice on that first contact email to get that call, get a meeting, get a Zoom?
Um, no, I mean, we've kind of really beaten this thing over the head with, with getting the meeting, simply because,
Yep.
you have to go through a lot of steps to get there. And then once you've got it, just go do your thing. But I mean, asking for, a time and place is better than just saying, can I get 5 minutes of your time? Because they may not actually pay attention to that, right? If there's a specific date and time you want to meet, like in that last example where you said, Tuesday or Wednesday, that's the perfect way to ask that question. They may respond, they may not, but at least you've said, I'm conscious enough of your time and availability. I'm looking to do this on your schedule, not necessarily force this down your throat.
Yeah, make sure you a call to action. If there's nothing to action, then guess what? They will do nothing. Oh,
Yep.
that was interesting information about your startup. Great. I'm off
Yeah.
to something else.
Thanks, tips.
Yeah. So the sales pitch. Um, you've done more sales pitches than I have.
Yeah, it's the nature of the business when you're dealing with an entrepreneur. I mean, you're selling your business constantly to anybody who will listen. You're obviously trying to get customers, trying to get investors, trying to work with partners. You're always selling your business. So really, when it comes down to in this particular process, the one thing you have to make sure is just you have to provide some kind of value to them. Always be providing that value. Otherwise, they have no reason to talk to you.
Good advice. VCs hear a lot of pitches, literally hundreds for every one they invest in. After a while, it all starts to blur together in the investor's head.
Mm-hmm.
To get investment, you need to stand out and be memorable. You need to be remembered. You got to say, "Oh, last Wednesday I talked to those guys." Well, I've seen 500 people since, or 200 since then pitches. So you got to be able to stand out among all of that. So people remember stories. They connect with them emotionally. They don't
Mm-hmm.
remember cold facts. So tell the story about your company that shows the route, data, and decision it took you to get to this place. Understanding your mental process and that the mental process that you follow and the data and that you follow the data goes a long way to build trust and a connection. People want to know your mental process and your mental map when they're going to invest in you because they're investing in you, not necessarily this business or idea.
Not only that, your founder story is actually very important because if they understand why your business exists, they may actually see the market trends as well and be able to help you identify whether or not that's actually a valid business and it's going to make money for everybody around.
Yeah, and exactly. Who are you? You kind of
Mm-hmm.
talked about this. It can be a question, and truly, sometimes the right answer is to start from the very beginning. At the earliest stage of investing, this is the most important question. So it's essential to have a compelling story. When did you first realize this was a problem? The personal or career steps it took you to get there, and why this is your passion. Ideally, um, investors want to hear that you're an expert in this space, have a deep experience with the problem yourself, and have solved problems similar to it before. But understanding that many founders might not have all of that.
Mm-hmm. And the biggest thing is whether or not there's a market for your product and people are willing to pay you money for it, because there's a lot of entrepreneurs out there who have great ideas, but they go to an investor says, so what? There's nothing
Absolutely.
here.
So the next thing is, what problem are you solving? And this is kind of leads into what you're saying when you talk about market. It's important that the end of a conversation with the VC, we know what you're working on is a truly big pain point for your customers, and that there are a lot of potential customers with that pain point. I think I was trying to summarize what you were saying there. They need to
Yeah.
be able to understand what the problem is well enough as the investor, so that it's easily explained to someone else, so they can go around and explain it to somebody else. Especially talking to one investor, they got to go talk to the rest of the people in firm. You got to make it clear enough so they can walk away and say it to someone else. What that means is you need to explain the problem to them like they are an investor is a smart, curious person who likely knows very little about the industry or problem you're working on. So start fairly high level and leverage their questions to go deeper and deeper into the technical issues that you're working on. Be able to explain how different people and roles fill into the infrastructure and how they would interact with the problem that you are solving. However, be focused. Many problems link to other problems, which link to other problems. They want to know you're working on something specific enough to actually start solving soon. If you want to cure world hunger, great, but that's something that will be solved incrementally. And so know how to be specific about what piece of world hunger problem you're solving.
Very true.
And after the problem, the solution. And the solution should naturally fit into the story. The present vision of the product should specifically address the problem you're solving first, with a future vision that branches out into related pieces of the puzzle. They should understand how the different stakeholders might interact with your product and how it fixes each of their issues. Unless the differentiation is deeply technical, they care less. Investors care less about the technical aspects and more about the user experience. Unless there's a real need for deep AI or blockchain to solve the problem, don't tell them you're working on it, because
And
that's just a
honestly,
distraction.
what the other thing that they care about as well is what's the exit plan like? How do we get out of this and make our money back? If you don't have that kind of information laid out for them, it's going to make them really hard to decide whether or not you're a worthy investment.
Absolutely, and I go into that in a few of my other stuff, but understanding your exit plan in your marketplace early on really impacts your deck and what you do. Things like if you think you're going to sell to Microsoft, you're probably going to build on the Azure platform and not on Google or IBM's. As you like, and you take that type of stuff, and that's just a high level thing because now you're thinking ahead of time and you can see it and you can put the puzzles together and you can show people. It's a good idea to show an investor, probably not in the first call, but shortly after, what your exit thoughts are, because it's good to know that you've thought through the market. Investors only get their money back at a liquidity event, such as an exit or another investment. So they want to know when that's going to happen.
Mm-hmm.
Yeah, and don't just put blockchain in your company. I've had people, they're doing this AI blockchain and they're doing all this stuff, and they sit down with me, and it was a big anti-bullying thing at one point, I think. And okay, well, people going to houses and doing interviews. So, well, what does that have to do with AI and blockchain? How are you, when it's all just a manual process that people are filling in a form and you start anyway.
Okay, I'm still kind of wrapping my head around what you just said, but
Yeah.
what? Let's take that out one offline, and you can tell me about that one later.
It's like the blockchain lemonade company, for lack of a better word, right? So, yeah, if you've heard about that lemonade company in the U.S., their stock price went up 600% when they put blockchain in their name, and they didn't change anything else. Anyway, speaking of customers,
All right,
as a
carry on.
pre-seed stage investor, they don't expect you to have millions in revenue with a lot of high-profile customers.
Mm-hmm.
What investors do want to know is how long you've been working on this and what progress have you made. Have you built an MVP in 3 months? Amazing. You have paid pilots lined up with great clients. Awesome. You've got 1,000 users adding 20% a week because they keep telling friends. Solid virality. Speed of progress means as much, if not more, than where you are from a levels perspective. So don't be embarrassed that you're early. That's what's expected for early stage investors. If you filtered them out and they know what the size of check they write, then you know where you're at. It's not scary it doesn't scare early stage investors away. If the rest of the pieces are in place, that's more than enough to get you to the next call.
Mm-hmm.
Handling objections.
My favorite topic. Yeah, go ahead. Well, I mean, really, and this is one of the things that, it sounds really scary, but it actually isn't. Because if you're having an actual conversation with somebody about, about what it is that you are offering to them, they're going to have questions. Now, typically in a sales fashion, people will say, well, that's an objection if they raise a question about, how did you come to this conclusion? How are you going to get new customers? What's your go-to-market strategy? Those are all just valid questions that investors are asking. But in the sales context, those can be considered objections. So what you do is when you're trying to handle objections, you ideally want to understand what it is they're asking you, and then answer the question in a way that provides them with the answer that the answer to the question, obviously, but also provide them with some level of comfort that it's not going to be an issue, and that you have a way to solve that problem.
Absolutely. I think you said this before, or I got it from you, is that if the customer, and in this point the investor, doesn't think you can solve the problem, then they're not interested. So you've got to show them how you can.
That's exactly it. I mean, at the end of the day, when it comes to handling objections, it's really just about answering the questions they have about and helping them validate your idea, your thoughts, and whether or not this is worth it for them. So they're going to have questions.
Yeah, and answer them and show them the proof. You've got customers, you've got the data. This is your conversion rate. This is your ad spend. This is your return on ad spend. This is your LTV versus your CAC, depending on what's going on. We didn't get really into a lot of that, but they're going to have questions about your business model, about your business plan. And a go-to-market.
What's your marketing plan?
Yeah, and a marketing plan is not we're going to do stuff on social media.
Yeah.
How are you
going to get customers, right? What's your process for that? What's your thought process along those lines, right?
Absolutely, and you really need to understand that. And one thing is I'll note as a side, and we'll probably take up this on something else later, is the firms that have a detailed set sales process in startups, they get funded. Period.
You
Like
need to find customers.
no, yeah, the whole sales cycle. Like as startups who actually have a well-defined, documented sales cycle, a process regimented, they can hire somebody in and say, "Here's our process. This is your scripts. This is what you do." They get funded because they know how to get clients. They focused on that, and it works.
Yes,
Um,
that
so
is 100% effective if they know how to be if they have a process that works to get customers. That is definitely an easy thing to sell to a VC and say, look, this is what we have to do to make money here. This is how we're going to do it. Away you go.
yeah, and once you have a good CAC to cost per acquisition to lifetime value ratio, it becomes pretty straightforward to people, and you just got to prove that you can actually run the business.
Yep.
We're gonna rush this. Clean data room. Have all your stuff ready to go during the due diligence and process phase afterwards, before you're closing the deal. And you're gonna have to meet the family and the investors. They're gonna meet a few of your people, but you're gonna meet a lot of there. And there's no privacy.
No.
There's no privacy.
But
There's
and
no
also
privacy.
they're going to want to know who the people who are in charge of your business, and if it's just you by yourself, I mean, that's great, but you're going to need some help if you want to scale this thing. You can't do everything by yourself. So you're going to need to have some good people in place to be able to execute the plan.
And if there's time where you're gonna have to meet the senior partners, because you're moving along, you might want to hold off on that until you're ready. Like not necessarily do that early, so you've done enough and worked with the firm enough to make sure you're not bringing up wrong topics and risking the whole process. But you work with your first contact to make sure that that's a smooth process.
Yeah.
So in I can't remember the name of the movie off the top of my head now. Always Be Closing. Glenn Ross. Sorry, took a second.
Yes.
So always be closing. You know, if you start by saying where you are in the process and you're raising, all your discussions should be about, what your valuation are and what percentage, what you're looking to raise and what control you're giving up. So by the time you're getting around to get these finalized, you're looking for letters of intent, you're looking to close the deal, you're looking to get all this done. It should just be details now, right? Because if you've had 3, 4, or 5 meetings, everything else should have been worked out.
Correct. It's the closing is the natural is a natural step in any business deal that you're making, right? So, like you said, if you've gone through all of the steps, you've answered all of the questions, the next logical step is finalizing a deal, getting people to sign on a dotted line.
I really appreciate you taking the time to discuss this today and just kind of give us a different perspective on things.
No
Hopefully,
problem.
it was
Anytime,
interesting
man.
for the handful of people who jumped in and out, considering we didn't push this. But where can people go to find you if they want to work with you and find out about Songbird Marketing Communications and what you do?
So as you can see on the slide there, we've got my email address, phone number, songbird.marketing.com. We're on social media. Our handle is songbird_buzz for both Twitter and Instagram. We at Songbird, we talk to people about, helping them with their strategy, helping them with their PR, helping them with their social media. So all of these things that you're going to need as an investor to be able to, as an entrepreneur, to be able to build a product enough to not only sell to clients, but to sell to investors.
Fabulous. And what kind of clients do you like to deal with there, Trevor?
Well, we find that our wheelhouse is really in the small and medium sized businesses, simply because we find they're the ones that need the most help when it comes to this. Because when founders are starting businesses, one of the things that we've always noticed is that they're really good at either building software or doing whatever it is that they do best. But the marketing and the sales part is always going to be a challenge for them because that's not their expertise. And so working with somebody like us to help you, teach you how to do these things, not only so you can do them for yourself, or if you just want to have us do them for you, we can do that too. But the idea is to help fill in that gap for them because they may not have a marketing person on their team who can do that. it's an important it's an important thing to have, to be able to get customers, because that's the whole purpose of why you're building a business in the first place, right? You put this business together to do what? To just to have it sit there? No, you want to sell things, you want to make money. Well, you need help in doing that, and coaching people through that kind of stuff is what we do best.
Thanks again, Trevor. Really appreciate time. It's nice seeing you again, and let's get you back on again soon.
All right, anytime. Thanks, man. Appreciate it.
Talk to you soon.
All right, take care.